There we go. So we have, all things about advanced inventory on this page, where we comb through just the enterprise level advanced inventory functions, so you can check those out there. And we have this compare inventory features by QuickBooks version, where you can expand that, and it'll show enterprise, desktop premier, desktop pro, and plus and advanced, and you can scroll through all of those features. And
I just want to add, because I know that there's a lot of folks that are like, it's not apples to apples, and as I usually always like to say is, in desktop and desktop enterprise, you do a lot of the inventory functions in that software, but in QuickBooks Online, we're using a lot of external inventory apps in importing all the stuff into QuickBooks. So although I know today we're going to talk about some of the stuff you can do in QuickBooks Online, for any of the folks that are like, well, you can't do any of that stuff.
Yeah.
Totally get it. And we do, I just want to mention, we do a lot of the things outside of QuickBooks in apps.
Yeah. That's usually the, if you have some specialized workflows that you're already doing in QuickBooks Desktop, either just in advanced, in enterprise, or even Premier, that don't transition to QuickBooks Online, that's typically, if you still need to do those things, then you're going to be looking at some kind of inventory management solution to be able to handle that. And then you're not even going to be concerned about the inventory functionality in QuickBooks Online. You're mostly concerned then with the financial impact of that inventory movement posting into your QuickBooks, right? And that's where
it's just kind of moving to a new way of where all these cloud-based software is living. Yeah. Now it's kind of moving from a desktop-based thing, maybe a whole all-in-one solution, into a couple different disjointed things that all work and funnel all the info into QBO. And I can't get Facebook to work right now. It must be down. If I'm not cutting out, it means that my internet is fine. And I think it's probably that.
I remember it was like a year ago when Facebook went down for 6 hours and people were losing their minds. How am I going to get my fake news?
How people got through that.
Oh, yeah. But we have also a blog that I originally wrote on the Firm of the Future blog, and I repurposed it again and added a little bit more on our School of Bookkeeping about managing inventory specifically in QuickBooks Online. So you can check that out here from this page. Oh, and look, there we are down at the bottom. So you could always sign up for the workshop if you're not there. It's kind of redundant telling people to sign up for the workshop on the workshop, but that's also there.
And I mean, I'm glad you mentioned that, for people that do manage their inventory in QBO, because especially with e-commerce people that are maybe only on one channel, it can be done. So you can't rule it out.
You don't necessarily have to discount it just because it doesn't have assembly items, for example.
Exactly. If, like you said, if you're buying stuff and reselling stuff, it can be done. And sometimes it's suitable. And so, as long as you're kind of up to date with all the limitations and rules and stuff like that, which we're here to tell you.
Yeah. Okay, now let me turn this off there so we can put us back together there. Okay, so just want to bring up my notes here. So we've got the blog, we've got the course. So the main differences between desktop and online is something that I learned at the latest Intuit Connect. I almost said QB Connect there for a second, but at the last Intuit Connect, I sat in on a breakout session, and Deb Deffer was actually leading our table discussion. And she mentioned something that I never even considered, in all my time of doing conversions and migrations, there is a fundamental difference with the way that QuickBooks Desktop calculates costs, and QuickBooks Online calculates costs. So,
do tell.
Yes. So inventory cost calculations in Pro, Premier, and Enterprise, with the exception of Enterprise Platinum, is weighted average, right? So the easiest way to describe that is just however, because costs will fluctuate, and costs fluctuating on the up is a hot topic these days. As costs go up or they fluctuate over time, as you're purchasing that, you want to get a better understanding of that cost. And there's 3 or 4 major ways to do that, and they all have their pluses and minuses, pros and cons, right? So what QuickBooks and a lot of inventory applications tend to rely on, just to kind of give the basic fundamentals of spreading out your costs over time, is weighted average. And it's not just an average, right? Like, so if you bought one item today at $5 and 10 items tomorrow at $10, it's not the average of $7.50. It's taking weighted that the 10 at 10, the individual widgets purchased at $10 each, and that one that was purchased at $5. So it'll be closer to the $10 range because you purchased more, or you have more in stock that are at the $10 level than the $5 level. So that's what QuickBooks Desktop is channeled around when it comes to that. It's the weighted average. So you will always see your inventory valuations based on the weighted average of what you currently have in stock, and you will see your cost of goods entries when you sell those items based on the calculated weighted average at that time. Doesn't mean that you can't be prescriptive of the costs at any given time. You just have to make an adjustment or a valuation adjustment at that time. And QuickBooks is really flexible about and being explicit about what that cost actually is. And you can do a cost recalculation at any given time. At this moment, if we're coming up on the end of the year, you're coming up on January 1st, and you want to reevaluate your inventory, you can do that in Desktop.
Yeah, and fun fact, some people even recalculate the value of your inventory on something like LIFO. You can't file your taxes that way, but you can calculate your inventory that way. But I don't know if you remember doing actual weighted averages in high school math, but I do. But I can't remember how to do it now. I'd have to look it up on ChatGPT.
But just know that QuickBooks, that's how it does it, right?
Standard.
And that's the standard. So with the exception of Enterprise Platinum Edition, as we had talked about, it's the only version of QuickBooks Desktop that allows you to do FIFO, which is first in, first out. And we had talked about this with Sean about the cost calculations, and which is the better way to do that. The challenge is with FIFO is that if your costs are going up, you won't see those costs hit the profit and loss until the lower costing inventory is sold, right? So there's this lagging indicator of your costs because it's first in, first out.
That's why larger companies sometimes will opt to do it with LIFO to reevaluate it. But does Platinum, you said, right?
Yeah.
Does Platinum allow you to pick either weighted average or FIFO, or is it just FIFO?
In QuickBooks, it's a checkbox and a date. So you could basically reevaluate your inventory from weighted average or FIFO. I wouldn't recommend doing that on a regular basis, because that means it has to recalculate everything. But you can choose different dates for the cost calculation
in Platinum.
In Platinum.
Okay. So but like from the beginning, let's say I'm starting out a new one, I can choose between those two. Yeah.
Yes. And So really, with regards to QuickBooks, those are the only two methods of cost calculations that you have. Now, QuickBooks Online solely will do FIFO, right? So it's first in, first out, right? That's the way that cost calculations are going to be calculated. You do not have any choice in the matter when it comes to that.
Which, by the way, FIFO is the most and weighted average are the most widely used.
Yeah, they're the most common of the two. So you just with QuickBooks Online, you don't have a choice. The only time that you have a choice is if you're using Enterprise Platinum Edition. So that's that, right? So if you are using anything but Platinum Edition, as far as your cost calculations, and you decide to move from QuickBooks Desktop to Online and you're tracking inventory, you are now putting yourself in a different cost calculation method, right? So there is a tax implication for that you need to consider and be aware of, right? Because QuickBooks, if you're filing based off of weighted average as far as your prior tax returns, and then come October, you decide, well, I'm moving to QuickBooks Online because I'm not going to pay $999 for Pro anymore. Might as well pay $999 for Plus, right? But if you move mid-year, your cost is going to be vastly calculated differently, especially when there's fluctuations with your costs from your suppliers. So what Deb was saying is that what she does when she migrates anybody that has inventory is, and this is an interesting. I'm going to actually try it out next time that I do this. Is that what she does is she zeroes out the quantity. She does a quantity adjustment as of whatever date they're doing the conversion, and puts everything, and I can't believe an accountant said this, she puts the adjustment to opening balance equity.
All right.
Right?
Well, it's a placeholder.
Yeah, and it's just for a placeholder, right? Because she'll zero out the quantities, and the total value that whatever QuickBooks has calculated up until that point has would be zeroed out, and that will go and show up on the balance sheet as opening balance equity. Then she moves them over, and she chooses not to move over inventory, which is, again, it's another challenge, right? She doesn't move them over as inventory items, and that this is where I'm not quite sure of the nuts and bolts, behind it. But when you choose not to move over inventory during the migration from desktop to online, what happens, and this is what we discovered in our project that we're working together, Rachel, is that those items still get created in QuickBooks Online, but they get created as non-inventory items. Right?
Yeah.
So at that point, you can turn them into inventory items. You can be explicit about your start date.
I like that.
And then you're able to do a physical count. On that date, set up the items the way that they currently have, and then you're able to pick that FIFO start date from that day. The challenge is you need to tell the IRS that you're doing this differently. So there is a form, or there is an issue with being able to just transition from one to the other, without informing the powers that be before they figure it out and then send you a nice little notice.
Is that based on your filing entity?
Yeah, I mean, it's however you have initially told the IRS that you're calculating your costs based on X, whatever that happens to be. If you decide to change that, then you need to let them know about that.
Yeah.
The challenge is that you need to inform them, right?
Mhm.
Because from the moment that you start using QuickBooks Online for your inventory, it's now FIFO. You don't have a choice, right?
Yeah, I feel like it might be more of a thing if you're a C corp and you have your own return. I think if it's a pass-through entity, it might not.
Yeah,
do
I by no means
as much as a thing. Yeah, it's only because your balance sheet isn't taken into consideration in a pass-through entity. So I have a feeling it's probably just for a C corp, but I can find out.
Yeah, that's a good point. So those types of things are considerations to know. But bring up my notes here. So that's the biggest thing to be aware of. Now,
I like that method, by the way, because I feel like it just gives it helps you avoid a lot of problems. It's like, oh, these 4,000 things were all created as inventory items with potential negative quantities. You know what I mean? It's like I'd rather have the items come over as non-inventory items without a balance, and then I have the flexibility to start that however I want.
Yeah, because this will avoid future surprises, which we have discovered that there's a couple surprises in this with this project that we're working on, because negative inventory quantities, as they're not necessarily a terrible thing. I mean, you normally, and when we talk about negative inventory, we're not talking about a disposition of this guy is not a positive person. We're talking about where inventory quantities show in the negative, right? So,
and it doesn't happen in real life. So when you see negative inventory on a piece of paper, you're like, oh gosh, yeah. And some systems don't allow you to have a negative inventory just because it can be such pain.
But there are some real world situations that cause QuickBooks at any given time to show of an inventory quantity on a negative, right? So if they create an invoice today on something that they don't have today, they're going to order it and they're going to receive it a month from now, right? That sale decrements the quantity on hand of that item in a negative way, right? So it's negative. As long as there is a cost associated with that item and things of that nature inside of QuickBooks, even in QuickBooks Online, as long as there is a cost associated with that item, the sale of that item is not negatively impacted, right? But when there is a situation where they create an item, there's no cost, there's no on-hand quantity or what have you, there's nothing to tell QuickBooks that there was a cost associated with it, they could potentially be having a negative or a ghosting cost because it doesn't decrement inventory asset and it doesn't increase cost of goods sold because of the sale.
Right. I mean, and the fact that it lets you have that negative inventory, that lets the cost of goods sold be recognized at that point of sale. Because a lot of people are doing that with like kind of a quasi dropship workflow. So they do the invoice first and then the purchase. But if that purchase isn't there, they want to do the sale first and recognize those COGS. But if the item isn't physically there yet to be received in, there's other systems out there that won't give it a cost of goods sold. So the fact that QuickBooks allows this is actually a good thing.
Yeah, because and then there's the whole ramifications of negative inventory in the desktop world. It tends to cause data damage.
Yeah.
So when you because it's thrown in a negative space, that could potentially cause some data damage when it comes to any kind of condensing or anything that's file specific, updating the file from one version to another and those types of things. Negative inventory, if you're in a condition, it's kind of like having an open wound on your arm and then trying to go swim in lemon juice, right? So I mean, probably painful.
That
Right?
doesn't sound fun.
We'll let that image just sink in.
So I just want to say though, when people do that, they're making the sick, because like in ideally what you would do is you would make a purchase, receive those goods into inventory. Let's say you made a purchase of 5 widgets. You then received those into inventory. Now I've got 5 that I can sell. Then I create an invoice and I can sell 1 or 2, 3, 4, or all 5. And then that'll deplete my inventory back to 0. But like what we're saying is the opposite direction is we're going to give an invoice first, starting with 0 widgets, deplete them down to -5, and then make the purchase and bring them back up to 0. So a lot of people do that, by the way. And so it's actually nice that this allows you to do that. Oops, sorry.
Right. So having a negative inventory isn't such a terrible thing as far as the cost. QuickBooks allowing you to do that in the desktop round. But
what's happening, you're always bringing it back up to 0, and you've got a handle on it.
Yeah.
Otherwise, it could spin out of control.
Now, what we discovered during this project that we're working on is that if you never get it back to 0, that could be a challenge, right? So, in this particular instance, they're a consigner of art, right? So they never would actually tell QuickBooks that they've received it because they never actually held it in stock, right? So they created all these inventory items and then sold them, which then would handle the accounting side of what they would need it to do. So they served a purpose by doing it this way, but they never received it in on hand to zero it out. So they had thousands of items.
Yeah. Just always continuously reducing in perpetuity without putting it back in.
Now, the problem is that when you try to do that migrate inventory items from QuickBooks Desktop to QuickBooks Online, and they're in a negative, QuickBooks Online doesn't like that at all. Right? So it would not create those items at all. So this, going back to the other option of not bringing over your inventory items at all, allows QuickBooks to create those items and handle the accounting side of things for those historical transactions, but just as non-inventory items, the non-inventory parts. So it handles the accounting and the financial impact of those prior inventory items just as non-inventory. And then you can then pick up from that date moving forward if you want to still make those items inventory items if you wanted to, but it cannot create the item if it's in a negative inventory state. So that's something to keep in mind before you even go and move it over. And then you have your choices, right? You can either correct the negative inventory situation in Desktop and then allow it to move over as inventory items if you wanted to, or not bring them over as inventory parts and then pick up from that point to move forward as turning them into inventory parts inside of QuickBooks. So and we had a workshop of how to do that in a mass using the spreadsheet sync. So you can do that pretty quickly. I wouldn't say quickly, but it's less than going through each particular item and turning it in. And then another project that I was working on that where things came up is that QuickBooks Desktop allows you to inactivate items even if they have a quantity on hand.
Oh, you can't do that in QBO.
No. So that's a fundamental difference between the two. Mm-hmm. Anything that you inactivate that affects a balance sheet account inside of QuickBooks Online, QuickBooks Online has to zero it out first,
Mhm.
right? And so if you have a petty cash account that's a bank account and you just want to inactivate it, you're not using it anymore, and there is a balance. When you go to inactivate it, QuickBooks says, "Hey, there's a balance. I'm going to zero that out first." And well, I mean, not so many words, but I'm paraphrasing QuickBooks here. But it creates an entry to zero out the balance to zero and puts it in our favorite account of opening balance equity, so that you can determine what you want to do with that balance. The problem is that if you inactivate an inventory item that has a quantity on hand, you didn't take care of that balance first, right? So in order to make sure that everything matches according to the balance sheet, QuickBooks will try to create that item, see that it's inactive, and then try to zero it out. Well, it can't, right? Because now you're making an adjustment to your financials that didn't exist in desktop.
Right.
So that's something else to also keep in mind, is that, do you have any items that are on your inventory list or your item list that have a quantity that are just happen to be inactive? Because in desktop, it just, if you want to make it inactive, go ahead. It'll just hide it on the list. It's just when those inactive items that have a quantity try to come over to QuickBooks Online, that QuickBooks Online and the migration is just going to say no.
Well, what will happen to them? Did you just say what will happen to them? Will it just error out, or?
Yeah, it will skip over that, and that import summary that you get will look horrible, because it'll have that comparison between what's in online and what's in desktop. And you will see a huge discrepancy between cost of goods sold and because those items wouldn't be created because they can't. And then any transaction that they were used on subsequently can't be created. So you've got a whole domino effect or spider web of transactions that are not going to make the journey from desktop to online because of this situation.
I guess, why would you have inactivated items in desktop if there's a value sitting on the balance sheet?
Really good question.
Maybe you don't want anybody using it anymore. Yeah. Like, you're okay with having those widgets there, but you don't want anybody.
Maybe the accountant made an adjustment to the value of the inventory, but didn't do the prescribed workflow, to zero it out first before taking that. They just saw that there is an option, right? This is where you cross the line between could or can and should, right? Like,
because if you've got those values sitting on your balance sheet of those items, you want to be able to create an invoice and sell them potentially with an active item.
Yeah.
Otherwise, it's just sitting there.
Yeah, like maybe you're a seasonal business and they're no longer an active thing, and you already took care of your physical count in another way rather than that particular item.
Yeah.
So then, well, I don't want to see that on my list anymore and potentially sell it. So I'll just make it inactive, which will hide it in terms of, so there's no financial impact for in desktop by inactivating things.
Okay. It's not going to create an inventory adjustment and send it to the P&L.
Exactly.
Like it would in QuickBooks when you zero it out.
And online, it's going to, anything that has a balance is going to need to be adjusted to zero before it does that. So ideally, you would want to do that and be explicit about it. Otherwise, it's just going to go to opening balance equity.
Yeah.
And then you have to figure out where you want to put it. So those are just some of the key considerations when you're dealing with inventory. If you are considering moving from desktop to online, this has nothing to do with any of the features that you might be using in desktop that don't necessarily transition. This is just making the journey from QuickBooks Online or desktop to online, so that your financials are match, or at least pretty darn close. So if you have those differences, so like one of the things about fluctuating costs, right? It becomes to QuickBooks will ask you, what day are you do you want to start uh, cost calculations at FIFO, right? And typically, you would want to choose like the beginning of the year, because you're probably going to tell the IRS that this year is when we're using FIFO. However, if your costs fluctuate, your balances are not going to match, likely, right? Because of the weighted average cost calculations that happened after the date that you're choosing your FIFO date, right?
Right.
So the way that you will get an exact match when it comes to inventory is choosing the date that you're doing the conversion as your start of your FIFO date.
Okay.
That way it's going to match.
Right.
It's going to say anything that happened prior to that date, whatever QuickBooks Desktop did to calculate that cost, that's what I'm going to use.
Right.
Right. Whereas
you're basically having your ending inventory valuation balance of when you came over from Desktop open up your inventory valuation balance starting on day one of QBO.
Right, which then goes back to the whole Deb Deffer workaround, where she would actually zero out the quantity.
Yeah.
And then choose that date, because then that's now an event to say, hey, I'm gonna pick up from this day. I don't even know if these are accurate, these accurate counts in Desktop, but I'm gonna make sure that's accurate over in QuickBooks Online moving forward.
And I like that, because if they're going to do a count, it's in there's I always say, please get a count. That's a really good way to use your count and start it as it actually is sitting on the floor. I was going to ask you, how I always thought it was pronounced defer, like I'm deferring my tax payment. It's defer?
That's the way I've heard it pronounced. So if you know something different, maybe we should have Deb on and at least just to or maybe we'll go and look at her Facebook page and then see, how it's pronounced.
Yeah.
Where they have that, how do you pronounce my name?
Yeah, but
if I'm saying it wrong, I apologize.
No, it's probably Deffer. But I did want to add one thing. So for anybody, because I have a lot of conversations about people that are switching from Desktop to online, and they will not be managing their inventory online, it'll just be valuations. And in that situation, you do not want inventory turned on. So make sure that you understand that fundamental rule is that inventory balance, yes, but inventory items, no, because you'll screw everything up.
Yeah, and then if you're if that's the case where you're not tracking inventory, just decide not to bring it over. And that way QuickBooks will bring over the history, and it will bring over the historical financial impact, however it occurred inside of QuickBooks Online Desktop, and then you can then pick up and move forward from there.
Yeah, because presumably you're gonna do your inventory in an IMS, and then when the items go in there, you've got a starting balance, and then whatever your balance is on your balance sheet in QBO, you could always do an adjustment to make sure that those two things are jiving.
Exactly. So we'll, I think we'll put a pin in this one, because hopefully it's some good nuggets of information about inventory and cost calculations, and how the differences between QuickBooks Online and Desktop, and how that kind of transitions between the two. We are, again, just as an announcement, we are turning our workshop, our webinar, into eligible for CPE very shortly. I'm still working with the folks over at Earmark to get that set up. But typically, what will happen is about 5 to 7 days after the workshop, they'll create the quiz and the course to be able to get that. And then if you're a member of Earmark, you can just go in and take the course if you saw the you saw the live workshop, or you can rewatch. If you didn't get enough of us, you can rewatch it, and it'll be the webinar, not just the audio. So you'll be able to watch us all live.
Yeah, and the quiz is not hard. It's just like 5 or 6 different calculations about weighted average. You'll be fine. Just kidding.
You are scaring people.
Just kidding.
So next week we are going to be talking a little bit about, I can't remember, but we have. I'll post it shortly. But we'll be talking about. I think what we're going to talk about is login issues, because we want to talk about the Intuit login and login.
That's my favorite
address, which would be specific to you, Rachel.
That's my favorite topic. Oh my goodness. Okay, wait. So next week then is the 18th, and then I'm guessing we won't be meeting on Christmas Day.
We'll take. We're not going to do Christmas or New Year's.
Okay. Well, then next week we have to have a festive.
Okay.
Slash
my Santa hat on.
Hanukkah / Festivus.
Right.
/ Kwanzaa, whatever anybody celebrates. We have to have a festive.
Right.
Workshop Wednesday.
We'll do snow. Look at this.
Oh, it'll probably be snow.
There we go. Look at the background. We've already got a festive lights background. So we'll see that next week.
I can point it towards my window outside in Detroit, and I bet you there'll be snow on the ground.
There we go. All right. Well, thanks for joining us. We'll see you next time on the Workshop Wednesday.